So let's jump right into this topic of fees. So, what kind of fees do you pay when you're investing? So, the first one I want to talk about is one of the most obvious, and it's one of the ones that just about everybody who's investing on a consistent basis in any kind of mutual fund or ETF is going to have to pay. And that is the expense ratio. And what an expense ratio is, it's just a fee that's stated as a percentage of assets under management. So a percentage of, for you, the amount of money that you have put into an account, but for the mutual fund itself, the entire amount of assets that it has invested, it's going to take that percent of those assets as a fee. And so your expense ratio is going to be stated on an annual basis, and you're not going to be billed for it, and you're not going to see it as uh, some kind of line item or whatever that you're going to have to pay out of your pocket. No, it's going to come directly out of your investment account, so you don't have to worry about paying directly, but you do want to make sure that you're not overpaying out of your account for these fees, because that can eat into your net returns. Then another type of fee that's associated with some mutual funds, not all, but some, are called 12B1 fees. And so a 12B1 fee is for the marketing and distribution of a mutual fund. So, in order for managers to market a fund for distribution and to try to get more investors in a fund, they may charge a 12B1 fee to get the name of their fund out there. And so, this will typically be stated again, either this may be a dollar amount, but it may also be a percentage, typically a percentage of assets under management. And this also can eat into your returns, but only some mutual funds have this, and especially those that are less common mutual funds will be having these types of fees. That way they can get their name out there and try to market their fund as well as possible. Then there are, and this is probably the most common type of fee paid, are these custodial fees or account management fees. So this is going to be paid, if you're invested in an IRA or 401k or whatever. This is some dollar amount or percentage of assets under management that is paid directly to the provider of your account. And so these are really, really common fees that can show up on your investment accounts. And this is not dependent on the type of investment that you hold. So like the expense ratios and the 12B1 fees were dependent on the type of investment, so mutual funds, ETFs, whatever. But regardless of your type of investment, you may have to pay these account management or custodial fees anyway. So that's something that you need to look out for, especially in your retirement accounts. Then there are also loads, commissions, and trading fees. So loads are typically on mutual funds, and you'll hear front end or back end load. So basically what it means is you pay some percentage on either the buy of the mutual fund, so that would be a front end load, you would pay some percentage, or you would have to pay a back end load, which is some percentage on the sell of the mutual fund. So that's where a load would be. Then there are also commissions that may have to be paid for buying certain mutual funds, and those are paid for the managers and the companies to make money for actually being able to sell the fund to you. And then trading fees are a tad different. Trading fees may have to do with the particular trades that you're putting in. So this kind of has gone away in the recent past, not completely, but it's been greatly diminished. So a lot of firms have taken their trading fees either down to zero, or they're very specific as to what you do have to pay for and what you do not have to pay for. So this is much easier now, but all that it is each trade that you make, they're going to charge you some dollar value. And like I said, for most companies, especially if you're buying their mutual funds or their ETFs, you don't have to do this. Or if you're doing very simplistic trading, you don't have to do this. But then when individuals get into more sophisticated trading strategies, then they'll start charging those types of fees. But it's still something you need to look out for in case your brokerage firm still does this type of thing. So now that we've identified some of the particular types of fees that you should look out for, let me just hit you with this. fees are bad. And why do I say fees are bad? That aren't they serving a purpose? Aren't they doing some kind of good? Well, not really, not for you. So any fees that you pay are going to eat into your returns. And that's a problem. We want to maximize our returns, like we've talked about previously, maximizing our returns by minimizing risk. So the most return for the least amount of risk. Well, I don't want that to happen and then get my returns eaten into by some other entity in fees. So I want to minimize my fee load as much as possible. That way I can maximize my after tax, my realized returns.